Okay, it should be live now, Cal.
Very much. Hello everyone, welcome to the Audit and Risk Committee on Wednesday the 27th of January. I need to read out the preliminary introductory remarks for a remote meeting. This is a meeting of the Council which has been held remotely. The meeting is being recorded and streamed via YouTube where members of the public are able to watch the meeting. Please note that any comments posted on the chat feed of the Council's YouTube page during the recording of this meeting will not be monitored by the Council. The recording will be available on the Council's website following the meeting. All members have been provided with remote committee guidance note prior to the meeting. This can need to be adhered to during this remote meeting. Points include all mobile phones and devices should be switched off or set to silent so that the meeting is not interrupted by ringtones. Please switch your profile to mute unless you are speaking. If you wish to speak, please raise your hand in order that I am aware of your wish to speak. And for each item, officers will present the report and the committee will discuss it. Okay. So the first point is item number 1, apologies for absence. I haven't been notified of any. I think everyone's here.
No.
So moving on to item number 2. Are there any declarations of interest from committee members? No. Okay, thank you. Item number 3 are the minutes of the committee from the 18th of November, which I'm sure you've all looked through and read. Are there any points arising from the minutes? And if not, we'll take a vote on the accuracy of those meeting minutes. Okay. Okay, well, go to the vote. I'm in favour of the minutes. Councillor MacDonald.
In favour.
Councillor Henry. Oh, you're muted.
Sorry, muted again. In favour, Chairman. Thank you.
Councillor Kettle.
In favour.
And Councillor Mackenzie.
In favour.
Thank you very much. Okay, so that's been voted and passed. Moving on to item number 4, which is the annual audit letter 2019 to 2020. And I'll hand over to David Eagles to read through the meeting. Oh.
I was just going to introduce it first, Chairman.
Oh, right. Yep, sure. No problem.
As the committee will be aware, what you're being asked to consider tonight is the annual audit letter from our external auditor, BDO, and David Eagles is here to answer any questions. The letter actually summarises all the information that has been presented to the committee before. So you originally had the completion report regarding the accounts to the committee on the 29th of July, and then you had your verbal update on the 18th of November in respect of any of the findings, and David and Ross took us through that in quite a bit of detail from there. So the actual annual audit letter just pulls those two bits together. There isn't anything really additional in there that I and officers wish to bring to your attention. So really it's just if there's anything specific David wants to actually mention, and then over to members for questions. David?
Thank you. As Paula said, it's a summary document which repeats information which the committee has already received before. And I suppose in summary, you had an unqualified opinion on your financial statements and an unqualified conclusion on your use of resources. Just really to highlight that the accounts were signed on the 26th of November, so 4 days ahead of the extended publication deadline set by MHCLG. All I was going to say in that respect was that that makes you one of only 45% of local government bodies in the country who achieved that. Last year was very difficult for a lot of different reasons, and we're still sort of unpicking some of those matters, but I think that puts you in a good position. It illustrates that to have achieved that, even though it was later than we had hoped, was still a very good achievement. And moving into 2021, the government, MHCLG, are taking action to address some of these sort of issues and reflect on the fact that we nationally had such a sort of a poor achievement of that position. So we've had a recent sort of debrief session with the finance staff, very constructive as we'd expect, to try and address some of those sort of issues, and we'll be sort of putting that forward in the plan for next year. I didn't want to add any more because, as Paula said, the information there is what you've seen before in this committee.
Well, thank you for that. It's really pleasing to know that we're in the top 45% of that, and it just reflects the good work that's been done. Are there any comments or questions at this point? I guess Councillor Mackenzie, please.
You mentioned on page 9 of my report that you think reserves are sufficient and will see any oversee any spending gaps, but obviously reserves can only be spent once. Is it your opinion that there'll be economic recovery and then finances will get back to normal, or are there any other problems you foresee?
So I wish I had a clear crystal ball to be able to answer that directly, but what we are required to assess is really the arrangements that the council has in place to assess the position and the sufficiency of reserves, and also sort of the forward financial plan. We recognise that things are uncertain, but our conclusion in respect to this area, this sort of financial sustainability area, is that your arrangements are adequate, and that's all to speak for pretty good, and that your arrangements for dealing with that and addressing sort of gaps are robust, and you've got a good track record of dealing with that. So I can't say any more about how the future is going to pan out, but the sort of the sensible assumptions you're making have been sort of taken into account in our consideration of your arrangements.
And what are the biggest risks you would say to the council's financial stability?
I'm sorry, I'm finding it very hard to hear what you're saying.
What would you say are the biggest risks to the council's financial stability?
Certainly at the moment, I mean, we're looking at situations where the levels of sort of council tax and business rate recovery can be reducing. Elsewhere, there are threats to covering COVID-related costs, and sort of councils having issues with that. Where there are large portfolios of commercial investments, there are questions about how viable that is to continue to support the council tax position. But those are sort of issues that we're tending to find elsewhere.
Okay, thank you.
Thank you, Councillor Mackenzie. Councillor Henry, please.
Sorry, I just wanted to pick up on the point there. You talked about acquisitions, possibly future acquisitions and things like that. We've got a few properties. So I believe we've got a pretty desirable property in Bath. We've got Roaring Meg Retail Park. Obviously, we're in a very different world now from the world that we lived, inhabited when we bought these places. Lots and lots of retailers have gone, up to COVID, and certainly a good few since. In terms of those incomes that we'd made those investments believing that we'd get, what's the risk to us now with those sorts of things, and how is that really maybe affecting our? I mean, I guess I believe we've had conversations before where we have people that are looking at that investment portfolio and what are the best soundest investments for us. But how is what we don't know from this year and last year impacting on maybe some of the decisions we've been making recently?
I think all I can really say at this stage is that informed decision making it remains an area of focus under the new NAO Code of Audit Practice. So it's the sort of thing that we'll be looking at in terms of your arrangements for making sensible, well-informed decisions. I can't say at this stage what we'd be looking at specifically in terms of the particular transactions, but it's the rounded arrangements to risk assess that, to forward plan, to assess what sort of likely return there is as part of that transaction. But that's something as part of this year's work, the 2021 audit, which we're reporting during the summertime.
Thank you. Thanks, Chairman.
Thank you. Both pertinent questions. Any other members of the committee wish to comment? Okay, I'd just like to obviously reiterate that it's pleasing to note we've had an unmodified opinion and that proper arrangements are in place for value for money. Also, that the annual governance statement was consistent with the auditor's understanding of the council. And also, that goes without saying, but thank you to BDO and for working in cooperation with the officers, the work done in this obviously a difficult year. We thank you for your hard work and everything that goes on behind the scenes.
Thank you too.
Thank you. Okay, that report was for noting, so it's been duly noted. Move on to item number 5, which is the Capital and Investment Strategy 2021-22. I think this is Richard, is it?
Yes, indeed. Unfortunately, Tony's unwell, so you've got me. So I will try and do as good a job as Tony would do for you. So yes, you have in front of you the draft capital and investment strategy for the next financial year. Just to put the context of the role of this committee in developing that document. So as you do in most of the work that you do, you're acting as in a scrutiny role. The operational and monitoring role lies with policy and resources. This strategy is being presented to policy and resources tomorrow evening. But approval and ultimate adoption of this capital investment strategy lies with council. That's a key element of the Prudential Code. So it will be presented to council for approval on the 25th of February. Any comments and observations from this committee tonight? We will make sure that that they are shared with the Chairman of Policy and Resources Committee ahead of the meeting tomorrow night. So the strategy brings together the capital, investing and treasury activities of the council for 21-22. It looks ahead as well. You will subsequently receive 2 follow-up reports. There'll be a mid-year one that covers April to September, and then there'll be an outturn report following the year end. The strategy is included as enclosure 2, and that starts on page 33 of the agenda. The strategy sets out a delegation for officers to deal with day-to-day treasury management activities. The treasury management aspects are designed to be permissive, but there are further levels of controls that exist operationally. So, for example, the selection of investment counterparties, we wouldn't simply apply the criteria that are in the report and say, right, we're going to put that counterparty on our list. We would seek the 151's approval before we did that. Yeah, so there's another layer of control in there. And of course, when we're implementing this strategy, we will always seek to do so in a way that provides best value for money for the council. Very broadly, the strategy covers 3 things. It covers how the capital investing activities of the council impact on the council's debt position, how we actually manage this debt position, and how we deal with any surplus cash flows that would arise from time to time. There are 9 sections, I think. Section 1 covers capital expenditure. That's on page 39. So that sets out the proposed capital programs for the General Fund and the HRA, including how they'll be financed. Section 2 covers other capital expenditure, which includes all other activities of the council that we have to account for as capital expenditure. So, for example, it covers the investment asset purchases, the lease investments, financial support for the council's 2 subsidiaries, Acorn and Sempra, and the purchase of assets for strategic or regeneration purposes. Section 3, starting on page 52, sets out the forecast debt position. Section 4, particularly the bullet points on page 59, points 1 to 8, set out the proposed treasury management strategy. Section 5 is the investment element. It is the cash investment element of the overall strategy, and there are no changes proposed there to what was in place for the current year that we're in. Section 6 covers is a risk assessment. Section 7 sets out the policy on minimum revenue provision, which is the provision we make for repayment of debt, and there's no change to that policy from that which was adopted for the current financial year. And sections 8 and 9 include some budget information and present the prudential indicators that are required by the Prudential Code, which we are required by statute to have regard to. The most significant change this year is the overnight change to PWLB borrowing terms, from their perspective, lending terms, on the 26th of November. It followed a consultation earlier in the year. So essentially what's happened is that the government has changed the lending terms such that if a council is undertaking any debt for yield activities, and to be absolutely clear, so that means if a council is purchasing properties solely for the purposes of the financial return that it generates, then that council will be barred from borrowing money from the PWLB for the financial year in which it undertakes that debt for yield activity. The following year, it could borrow again, but in the year that it undertakes that activity, it would be unable to borrow from the PWLB for the totality of its capital programme. As you can, so one of the things, what we've done in this strategy is that we've reacted to that by saying, okay, well, we will assume no more debt for yield activity from the next financial year. That is not to say that such activity will not be undertaken, but we need to determine the appropriateness of further activity, taking into account there are other sources of borrowing. There's a very active local authority to local authority lending market, which I was quite taken aback the other day when I saw some statistics which valued that market at £10 billion. So essentially there's £10 billion worth of cash floating around between local authorities. So availability of short-term borrowing as an alternative to the PWLB needs to be assessed. We can access commercial borrowing. The issue with commercial borrowing is that up until the change to the PWLB lending terms, which were accompanied by a 1% reduction in PWLB rates, up until that point, commercial borrowing was quite often cheaper than the PWLB. That's no longer the case. So we need to do an assessment of the availability of commercial borrowing and what price that commercial borrowing might be. And then the final thing that we're looking at is that there are certain aspects of the real change that are not clear. So, for example, the guidance suggests that for refinancing current debt or externalising internal borrowing, so internal borrowing is if you'd use capital cash, to fund capital expenditure, and then you're going to borrow later. The guidance says that you can still access the PWLB, notwithstanding that you may be undertaking debt for yield activity. However, that is not clear, but we are in dialogue via advisors on this, and at the moment the answer seems to be looking positive and coinciding with our interpretation of what the new rules mean. So we're still working our way through that. I'm sure, as you appreciate, one of the reasons we went through these particular advices is because we knew they had access to the Treasury, and that's a really important part of the dialogue. Just to make the point that it is the Treasury that's pulling the strings here, not necessarily the MHCLG. So that's my introduction. the recommendation is that, I can't find it now. Could somebody read out the recommendation for me? I can't remember what it is.
Yeah, it's on page 24.
Yeah.
And that the committee endorses the draft capital and investment strategy for consideration by the Policy and Resources Committee and subsequently for the approval of full council.
Yeah. So that's the recommendation. As I said, any comments and observations that the committee thinks it is important are passed on to the chair of the Policy and Resources Committee. We will make sure that happens before the meeting tomorrow night. So I'm happy to take questions.
Thank you, Mr. Lartman. Are there any questions? Mr. Hall and then Councillor Mackenzie.
I'm happy, Chair, to defer to Councillor Mackenzie if he wants to go first.
Oh, that's okay. You go ahead.
Okay, thanks very much. The question concerns the Prudential Code. You've alluded to the fact the strategy has to be put together against the Prudential Code. As such, what assurances can be given the strategy has taken sufficient account of the guidance within the code and that it is in line with the Council's commitments and obligations?
Okay, thank you. I think there are two parts to answering that question. I think probably the first requires I need to give you a bit more flavour of what the requirements of the code actually are, and then tell you how you can obtain assurance that we're following those. It does link into the line of questioning. I don't think David Eagles is on the call. No, he's left us. It does follow on from what David Eagles was saying as part of their use of resources assessment. They do check the governance arrangements around activities such as this, and they reported in their audit report that they were happy with those governance arrangements. So that's one source of assurance. Just very briefly running through the requirements of the code, it's quite a long document. I'll just read out some of the key requirements of the code. There's a requirement to produce a capital strategy. You have that capital strategy in front of you. We combine that with the treasury management strategy, which is required by another code, and with the investment strategy, which is required by statutory guidance, because then you have one document that covers all of these things. It encompasses the whole of that activity. We are required to set an authorised limit for borrowing, the council is required to set an authorised limit for borrowing. That's it, that's proposed in the strategy. The code requires that it's aligned with the budget process. So the capital and investment strategy is produced in parallel with the revenue budget to make sure that the revenue budget takes account of all the consequences of our capital investing programme. It encourages financial planning and option appraisal, which we do. It must cover not just borrowing, but other long-term liabilities, such as finance leases, etc., which we do. So I think that members could be assured that if you took out the Prudential Code and did a tick against our strategy, you would find that we've covered all of that activity. Nevertheless, you may not have time to do that, so you seek assurance from elsewhere. First thing I'd say is that you have a group of professionally qualified officers who approach this in a professional manner. I think you can take assurance from that. You can take assurance from external audit, as I just referred to. I'm going to go out on a limb here and say you can take assurance from internal audit as well. Internal audit, I think you look at Treasury every 2 years, is it, at the moment, or every year? Yeah, every 2 years. And I can't remember the last time we didn't get a, whatever the highest one is, Paul, I can't remember what it is.
Substantial assurance.
That's the one, Mike. Thank you very much. You've got substantial insurance. This is indirect assurance, is that we've had no regulatory intervention. Nobody's intervened and said, no, you can't do this, you can't do that. Why have you done this? Why have you done that? And I think that the probably, quite an important one is that an effective strategy will set out what the risks are to the delivery of that strategy, and it will set out how to manage them when they arise. I think that you can take assurance that the strategy is robust enough to enable us to deal with these things, such that we haven't rolled up at an Audit and Risk Committee and said, oh, you know, X, it's gone wrong. Yeah, so, you know, I think you can take assurance from the fact that it is an effective strategy and allows officers to manage issues as and when they arise. I went on a bit there. Hopefully that answers your question.
Oh, thank you very much for that very comprehensive response. Thank you.
Thank you. Councillor Mackenzie.
What are the main changes to the document as a result of the economic situation of COVID?
Well, to the it's difficult to say that. So this is dealing with our capital and investment proposals for next year, and the revenue implications of those have been included in the budget, and that is all done against the background of COVID. So what I would say is that this is setting out a strategy that covers the activity that the council wishes to engage in next year in terms of capital expenditure and delivery. And it may be that the ongoing implication of COVID is that it compromises the council's ability to deliver those activities. It may come, as it has indeed this year. So, for example, if you take the capital programme, there was for the first lockdown, there was a pause in most of the construction sector. So the cinema was paused. The housing repairs and housing capital investment programme was paused, and there are costs attached to that. You know, there are costs accruing to it. So indirectly, and then as well, Councillor, that it's quite difficult to say, for example, borrowing is ridiculously cheap at the moment, ridiculously cheap. I was looking at, I've got the PWLB rates, so these are the rates for today. And we've got an inverse yield curve, which pleases me as an accountant. That basically, which means that rates are higher at the short end than at the low end. Sorry, at the higher at the short end than at the longer end. But 50-year money, 1.7% for 50-year money. So you could argue that, you know, that is a direct product of the economic situation that we're in. And one could argue that that's a positive impact. Indeed, this is intended to be a positive impact. It's intended to stimulate activity. Have I gone close enough to answering your question?
Yes, that does answer. One more question. On page 48, you've got some of the returns on investments. Am I correct in saying the minimum return used to be 2%? If so, how comes it's now lower? I might have misremembered. You're mute.
I've lost my agenda. Bear with me while I find it.
Page 46.
You know, yeah, I can't find the agenda at all. It seems to have disappeared. Just bear with me.
No problem.
Councillor, is that referring to the lease investments on page 40? Is that what you're looking at?
Yeah, that's right.
So that's a different aspect of our investments. So we've got three different aspects. We've got direct investments, which that minimum return is 2% over the portfolio. So some is higher, some is lower, but over the portfolio. The leased investments is split into two parts. So there's the revenue part that you get, which is slightly lower than the 2%, but also they're structured a bit like a mortgage. So you're paying off some of the actual cost of the asset. So you get a capital sort of return that's realised at the end of the lease. So that's sort of a two-part return, but the different aspects of the investment strategy are done in slightly different ways. And that's why that looks different to perhaps what you're used to talking about in the direct investments for that 2%.
Thank you.
Thank you, Owen.
Thank you. Thank you, Councillor Mackenzie. Any other queries or comments? Okay. I'd just like to pick up one point that in commercial lending on page 43. And halfway down the page, it reads commercial lending, and underneath it says in the second sentence, generally, these loans will be asset-backed to ensure the sums invested are protected with the interest paid to the authority, providing a differential on the financial costs to the council providing the service. Now it says generally these loans are protected asset-backed. Are there cases where the loans are not asset-backed at all?
I guess there could be, but I think the answer to your question is that we wouldn't engage in that activity. We'd only engage in asset-backed schemes.
Thank you.
Our current strategy is only asset-backed schemes, so
Yeah.
that comes our current strategy.
Just the use of the term generally, I thought, but then that's a great response. Thank you.
I did just, it's too late for the P&R committee, but in actual fact for the council version, we'll take that word out. We'll take generally out and we'll change the statement to be these investments will be asset-backed schemes.
Yeah, that's great. Okay. So are there any more comments or queries on this item? Okay, then the item is for voting on. Thank you, officers. The recommendation, let's shut my agenda and let's open it again. There we go. The recommendations are Council endorses the draft capital and investment strategy for the consideration by the Policy and Resources Committee and subsequently for approval by full council, and that's on page 24. We'll start the voting by myself voting in favour. Councillor MacDonald.
In favour.
Councillor Kettle.
In favour.
Councillor Henry.
There'll be a good bit of discussion on this document to come still, so yeah, in favour. Let's get it out there.
Absolutely, so that's in favour. And Councillor Mackenzie.
In favour.
Thank you. It's unanimous. Thank you to everyone involved. Moving on to item number 6. This is the internal audit and counter fraud progress reports. And this is led by Mike. Thank you.
Thank you, Chair. To give equal weighting to the work of both my teams, we now have 2 progress reports, one for internal audit, one for counter fraud. I'd like to deal with internal audit first, if I may. So if I can ask members or refer members to page 87 of the agenda back. Since my last progress report, the team have issued 3 final audit reports in relation to member inquiries, complaints, and the Safer Basildon Partnership. I'll come back and talk a bit more about member inquiries, complaints in a minute. In addition to issuing 3 final reports, we also have quite a lot of work in progress, which is detailed on page 87. Right, so I'll come back and talk about member inquiries and complaints, because both these audits actually received a limited assurance. What we found in relation to both audits, we found similar concerns, similar findings, in that the initial complaint or member inquiry is dealt with, logged effectively by the customer services team. It's then when that complaint or inquiry is rolled out to the service department, it's then the controls tend to fall apart. So what's happening is the complaints and member inquiries are not being dealt with within the time frame stipulated. Some of the complaints are being shut down without being addressed properly. And also where complaints or inquiries are not being dealt with in the stipulated time frame, the guidance suggests issuing a holding letter. These holding letters are not being sent out. So these are the similar concerns we found in relation to inquiries and complaints. What I'm aware of, this issue in service departments not dealing with this type of work. It extends into other areas in relation to freedom from information requests, audit recommendations, and I'll come on to audit recommendations later on. what I'm also required to do is to bring members' attention to changes to the audit plan. And this is dealt with under section 3 of my report. So the audit plan itself was approved back in May, and the audit plan's essentially a live living document, and there will be changes to the plan during the course of the year as new or emerging risks come online. Also, we plan our audits in advance. So there are some audits that we look to undertake or plan to undertake, which we can no longer undertake or doesn't make sense to undertake because the service departments are now reviewing those areas. So there's no point doing an audit if it's going to change, telling them what they already know. So what we'd like to see is we'll assist them to make those changes, but we'll come in at a later date once new changes and arrangements have been embedded and then undertake that audit. So as I say, there are changes to the audit plan, and these are detailed at section 3. And now I'd like to discuss briefly audit recommendations and progress made by service departments in implementing those recommendations. As we can see from section 4, there are a number of overdue audit recommendations now. The figure stands at 60%, so 60% of recommendations are now overdue. But that's a change in position because I mean I can report it one day and it changes the next because audit recommendations are live and service departments can provide an update at any point in time. That position changes daily, so it's a reflection at a point in time. So after getting criticised by people saying, well, that's not the true position, it's changed, and I accept that, I have to have a cut-off point when I report to members. This is the position at that point in time. There were X number of recommendations overdue. I'd like to now move on to counter fraud.
Oh, hold on one moment. Is there any questions on the first section regarding, and we do it that way, if that's all right, Mike?
Questions now or at the end, I don't mind.
Yeah, we'll do the internal audit now and then we'll go on to the fraud bit. Thanks, Mike.
Thanks for that.
Councillor Mackenzie.
Is any that have you considered like doing the overdue in say quartile? So this one's only just overdue when this one's 12 months overdue, and split them into quarters of less serious to more serious.
Yeah, we could further analyse the recommendations in terms to I suppose how long they've been overdue for. But at the moment we don't do that. We just basically there's a date there's supposed to be implemented by, and as soon as they don't hit that date, we report that.
Yeah.
What tends to happen is it's difficult to report by quartile because what happens is if it's not met that target date, the date is then changed.
Okay. Maybe just some sort of reporting mechanism for audit where you've got the original date and then
we're
broken down into very overdue and to only slightly overdue.
Yeah, that's something because there are two dates on the system. There's the original date that was agreed at the time of agreeing the report, and the date it's moved or changed to. And we do, and I can report that in terms of actually what was the original date for each recommendation. So I can further analyse that, and that's what I'm looking to do going forward in terms of providing more analysis in terms of the recommendation. When was the original date? How long is that recommendation is now overdue? It could be like 12 months, 18 months. So yeah, I'm looking to provide further detail to members to help the analysis, yes.
Thank you.
Do you want to come in there, Paula?
Yeah, if you don't mind, I think it would to give members a bit of assurance around this piece of work. This report goes to the council's senior leadership team, corporate governance board, before it comes to yourself. So obviously that senior management are aware of the situation, and we had quite a long discussion at that grouping around the internal audit recommendations, because as an authority we recognise that as part of the response to COVID, we haven't actually taken a step back and said, actually, let's go through these audit recommendations, and given the impact that COVID is having on us, should we move some of those dates? It should be down to the managers to let us know that, but we could actively do a piece of work around that. And secondly, at the moment, we're reporting on the percentage of all audit recommendations. And as you're aware, we actually categorise our audit recommendations into 4 categories. So you've got the low and the moderates, which are the kind of the best practice, the things that we would like to see being done, but are not crucial to the governance arrangements or to the control environment. Those are our critical and
Major.
That's it. Thank you. Somebody's read the report. Yeah, they're our critical and major recommendations. So what myself and Mike are going to work on is looking at how we can now bring a little bit more information to you as a committee and to the SLT Governance Board around, well, actually, how many critical and major points remain open and outstanding to be addressed, and what risk does that mean that we're carrying as an authority, and what progress is being made, so that you get a bit more information around those real critical areas, rather than just getting a blanket 60% of recommendations are not implemented, because actually 59% of those are likely to be lower level ones. So what we want to do is to put that into a bit more perspective for yourselves, so that you can then, we would like to see yourselves then calling in managers that have got critical audit recommendations that are overdue, to actually report back to you as a committee about what they're doing about them, rather than Mike fronting that all the time, so that you've got that opportunity then to talk to the service manager about what they're doing about it and understand the difficulties that they are having. So I hope that kind of will enhance the report for members moving forward.
Yeah, thank you. I think it's only right and proper that where major audit recommendations are not yet been implemented, that we do invite those managers in and ask them to account for the present situation. I have Councillor Henry and then Mr. Hall. Councillor Henry.
Sorry, Chairman. I just wanted to ask. We say that we're showing as 60% overdue. Do we have a comparison to what that is with other authorities? Is that a fairly sort of standard thing across authorities such as the size of ours, or do we measure things in different ways so it wouldn't be, measurable against other authorities? What does good look like, in terms of this reporting across the country?
Okay, yeah, we don't benchmark with other organisations in terms of recommendations overdue. I mean, I suppose what is good is different across organisations. What is good for one organisation might be different for another. It's not something we benchmark. And yeah, I think you set your own targets. You'd like all the major critical recommendations to be implemented within a 3-month window. So essentially, as we just alluded to, that the low or the moderate ones, we do allow some level of leniencies. But yeah, I mean, yeah, it's not something we benchmark. It's not something we compare with other organisations. But we do set ourselves an initial target of 25%. It's something we work on here as an organisation. That's something we set a target ourselves at 25%, and that's been gradually creeping up over the last few months. I think that's because I think there's other priorities at the moment, and in terms of COVID-19. But I think if we provide further analysis, what we will find is those 60% or overdue recommendations relate to low or moderate. So I think that further analysis will help to say whether it's good or bad. So if we implemented 100% of critical major recommendations on time, that would be good for an organisation. So that's where we could say that's good. That's a good picture. So if I came back to you for my next progress report and say, yeah, we don't miss the targets in relation to critical major recommendations, you would get assurance from that. That is a good picture.
Sorry, Chairman, can I just come back with one more, please? I just wanted to know, could you maybe give an indication of the type of things that are overdue? So something that's maybe at the lesser important scale, and then something that would be quite just a critical or major that we need to really get handled quickly. Could you just give us some examples, perhaps, of what that might be?
Yeah, I mean, if we made a recommendation like it needs a new policy or procedure in place, that would probably be a low priority recommendation. You've got a policy in place, but it's out of date. You need to update your policy. So that would be a low recommendation. If it is a showstopper, like the system will fall apart, it represents a major weakness, then that would have to be rectified straight away. If someone's not performing a reconciliation or not checking, I don't know, the bank's transmission before it goes out, then that would be something we would say it needs to be rectified immediately. So those things like which are procedural, I don't know, procedure update, policy updates are low recommendations, because we've got a policy already, it just needs to be revised. So yeah.
Yeah.
It's based on risk, it's a risk assessment.
Thank you.
Paula?
Yeah, I think on both of your questions, there's something that I would like to add. I think anecdotally, we have an Essex audit group that meet regularly once a month to discuss audit matters and any problems that we're all experiencing and how we're resolving those. And I think, Mike, it would be fair to say that when we have those meetings, we do discuss the difficulty in getting audit recommendations implemented. It's not something that all Essex authorities have got sussed and it's just us out on a limb here. I think we're all working in roughly the same kind of arrangement. But what I would say is, and I'm probably a little bit more stricter around this, in that when we set those recommendations, it's the service manager that tells us when they believe they can get that implemented by and how long they're able to, or how long they're willing to take that risk for. And then we agree that with them. So if we don't agree, if they've set a timescale for a critical of 12 months and we say, look, that's totally unrealistic, that needs to be done within the next 26 days or whatever, then we'll have discussions around that. So from my perspective, they're signing up to these dates, so they should actually hit those dates. The only times I would ever expect something to go overdue is if it is in relation to, I don't know, something is a systems update needed, but the piece of software can't be installed until other things are done, and therefore that's going to take another 6 months longer than we had expected. So I'm a bit of a strict one on this, which is why I want to focus a bit more on it in the report. So, but going back to your second question around examples, I think actually if you look at page 99 and page 100, you'll actually see we give a bit of a breakdown against the implementation of recommendations. And Mike does put in a bit of the numbers of how many are moderate and low, how many are major and critical. And just running my eye down that, we actually don't have any critical audit recommendations that are overdue. There are some major ones, and we want to be able to report those back. And there is some text at the moment about those in the first part of the appendix, but as you'll see, there isn't actually a huge number that are major or critical. Most of them are moderate and low, which should give the committee some assurance that key issues have been addressed that were originally highlighted.
Thank you. Thanks, Chairman.
Thank you. Okay, Mr. Hall.
Yeah, thank you, Chair. Question is, given the current uncertainties against the background of the COVID pandemic, can assurances be given that it will be possible to apply sufficient audit resources in order to be reasonably confident, excuse me, that the head of internal audit is able to provide an annual opinion on the effectiveness of the governance, internal control and risk management arrangements, please?
Yes, thank you. I suppose unlike my peers or other council organisations, I have a trump card up my sleeve in that I have access to a number of casual senior auditors who I can flex. So in terms of resources, I can bring them in as and when required, so they can increase their hours to assist in delivery of the audit plan. So I am, I believe, the only internal audit department that has access to casual staff, and I can flex those staff in terms of bringing them in to do more work as and when required. So we are on track to deliver the audit plan in its entirety, subject to those changes already identified. We have provided resource to the organisation in dealing with COVID-19. And then following the initial lockdown in March, and when the town centres reopened, I did lose my trainee auditor to support that scheme for a period of 8 to 12 weeks. But then I was able to then call upon my casual audit team to fill the gaps. So I can give you assurance that as and when I need, I can bring that additional resource in to deliver the audit plan, and that's quite good from my perspective. I can use them as and when. So, you know, when I feel there's a problem, I can ask them to increase their hours.
Thank you very much. Appreciate it.
Mr. Hall. Paula?
I think also we're at Basildon, we're in a slightly unique position to some of our other colleagues in other authorities, in that as the Chief Audit Executive, I actually have a number of assurance functions underneath my remit. So whilst internal audit are doing their work, I've obviously got risk management, governance, health and safety, and insurance and counter fraud that I can also draw assurances from that can then enhance that opinion that Mike gives, which will then go into the annual governance statement. So what goes into the annual governance statement will not just be based on the auditor's work, but also the assurances that we can get from those other assurance functions as well. So that gives the organisation a much rounder picture rather than just one viewpoint, if that makes sense. So I think we're not completely unique in that aspect. Some services, some audit services or heads of audit are set up in that way, but it does give us that much broader ability to provide a more general review of the council's governance arrangements in totality, which Mike can take into account.
That's great. Okay, I think we'll move on to the fraud bit in a moment, but I do feel that it's important that we, although following on from the discussion that we just had, if there are major audit recommendations which aren't being implemented, that we do invite those service managers into the committee to present. So I've got a general assent from the committee for that to go forward. Yeah. Okay. Okay, Mike, go on to the full fraud section, please.
Thank you, Chair. I'm not going to go through it in detail. I'm going to just basically present the headlines and what we are currently doing in relation to fraud. What's ongoing at the moment is the National Fraud Initiative, which all local authorities are mandated to participate in. So what's required from me is the submission of a number of data sets. They're quite varied. So we submit about 14 or 15 different data sets. So we submit data in relation to creditors, housing benefit payments, council tax, business rates. So, and then what happens is we submit that data off to the National Fraud Initiative. They match that data and they come back with supposed matches which suggest fraud. So we are then required to look at those matches and identify whether yes, there is a fraud or no, there isn't. And where there's not, there's no further action to take and we close it down. The National Fraud Initiative main exercise is every 2 years. And as I say, the data sets have just recently been submitted by myself and the results are now available. So my team will be looking through those results over the forthcoming months. But we do have 2 years until the next exercise, so we do get a bit of time to look at these matches. In terms of headlines, we have received in total 455 fraud referrals since April of this year. And for the same period, we have closed 426 of those cases. In terms of cashable savings to the organisation, that money that has come back into the organisation as a result of our work, we've saved the council around £76,000. In addition to those, as a result of our work looking into housing and tenancy fraud, we've recovered 3 properties on behalf of the council that can then be basically given out to new tenants on the housing application list. We also look at right to buy applications and look at whether they are legitimate and whether they're appropriate, and whether we have stopped 5 right to buy applications. The issue with right to buy applications, there's a large discount on offer in relation to right to buy applications. So basically applying to buy your council house, you know, is something quite a lot of people look to do, because there's a large incentive there in terms of the discount available to individuals. In relation to that, in housing tenancy, we also look at housing applications and in terms of whether they are appropriate or fraudulent, and we have stopped 4 housing applications to date. I'm quite happy to talk about it. If you've got any questions, I'll take those now.
Yeah, members, any questions or queries, please? Councillor Henry? Muted.
I could have been here for a week. I'm so sorry. Thank you, Chairman. It's just a little bit of clarification on what would constitute a right to buy fraud. Would that be, you know, coercion, somebody using somebody else's right to buy a property, or I can't imagine if I had the right to buy my council house, how anything I could possibly do other than, you know, obtaining the money illegally would be fraud. But it's just to clarify what constitute fraud in right to buy.
Yes, certainly. Yeah, I mean, you don't have to fund the purchase yourself. I mean, obviously you can obtain the money from a friend, a relative, whoever. So you don't have to fund it yourself. So basically, but yeah, there is a money laundering aspect to it. They need to identify where the money is coming from. So there is the potential for money laundering involved. So we do ask questions, and they have to provide bank statements. They have to show where the money is coming from. But the onus is also on the solicitor. So the solicitor handling the purchase is also required to undertake money laundering checks, and they are required to provide assurances to the council that those checks have been undertaken. The issue with, I suppose, the right to buy application, you have to prove certain criteria that you have been in that property for the last 12 months, I think it is. So if we can identify that you've not been living there, then that's a fraudulent application, because you have to be living in that property, and that has to be your sole residence. So if you've not been living there and that's not your sole residence, you're not entitled to the right to buy application. So that's the fraudulent element. We have to determine that you have been living there. That is your main property, your main principal home. And what we have found in cases that people have been making right to buy applications, and they actually are not living at that property. They've actually got another property and they're living somewhere else.
Okay, thank you. Thanks very much. Thanks, Chairman.
Thank you. Any other queries from councillors, members of the committee, including the independent member? Okay. Well, thank you, Mike. This report is for noting. Thank you for all the hard work you've been doing, and thank you for the update with regards to recommendations, internal audit recommendations, that is. So I will, the report is for noting, so it's duly noted. Agreed? Yeah. Okay. Moving on to item number 7, which is the work programme. And that is Anne, is it?
That's correct, Chairman. Yes. So if members could turn to page 113 of your agendas. This report provides members with an opportunity to consider the items for the Audit and Risk Committee, and members are asked to note the work programme.
Yeah, and Paula.
Yeah, I just wanted to highlight to members some potential changes that may occur. I believe, I know David's not on the call anymore, but I believe that the certification of grant claims and returns annual report is unlikely to make the March meeting, because they're not actually going to start that work until something like the 10th of March. And with the dates by which the committee cycles work and having to have the agendas published, they won't have a report ready for that committee meeting. So depending on what happens with local elections in May, if they are postponed and we end up having we may need to ask for a committee to receive that report rather than waiting until the first meeting of the new committee in June. Secondly, the RIPA report that is down, we just to let you know that we currently have a RIPA inspection taking place across the organisation. And what I have said to Rachel Glover, who is responsible for this area, is that I would like the annual report to reflect what the RIPA review has actually identified by the inspectorate, because I think that will give you your assurances around what's been working and what may need to be improved. So there's no point bringing an annual report with that element missing. So we're hoping that the draft report will be with us in the next few weeks, so that can be finalised and then incorporated into this annual update for you in March. But if for any reason it's not, we will keep the committee informed, and we'll maybe just do a verbal update to let you know just the progress of that investigation. I keep calling it investigation? I mean
report.
Yeah, the inspection rather. Yeah. So it was just wanted to highlight to members that, just in case they didn't appear on the agendas in March. Thank you.
Thank you, Paula. Yeah, but there's 7 items, as you can see, or 8 including the work programme on the agenda. It looks like the certification of grant claims will be postponed. So it does depend on how the government decide whether the elections will take place or not. So if so minded, I will ask for if that occurs, then I will ask for a meeting to be put in May. Probably a good choice for a month to have a look at that with any other items, depending on the situation with the elections. Is that general assent with that? Yeah. Okay. Brilliant. Okay, so that programme is for noting. Thank you. That concludes the meeting. Thank you all for your attendance and have a pleasant evening.
Good night. Thank you.